Alrighty, guys, what is going on? So, you guys just got an update. There's a lot that just came out, so I wanted to go over it real quick. So, the first one is going to be the Chill Key Levels Elite. Okay, so the orange and or the yellow and blue ones are going to be kind of support and resistance levels. Okay, um, as you can see, they change colors as they are hit or broken through. So as it broke through, now that's kind of become resistance versus support. So those are good to know. Okay. Now the red and the green levels are going to be where smart money tends to sell or to buy. So smart money tends to be buying, and as you can see, there's like a double green. This is like a dark green, and then there's like a very vibrant green. This is typically where like a big loading zone tends to be. And you can see the little support levels inside of there, the blue ones. Do you need to use this? You don't have to use this if you can, and it doesn't make your chart too messy. Obviously, you can turn it off and on um, as you please. But it helps you understand when you are, for example, like Rocket Lab. Okay, we go here. Okay, here's a good support. If we lose this support, are we looking for the next support? Okay, so right here, it's finding support here and smart money support. As you can see, the support, the blue box is there, but also the smart money green is right there. So like there'd be a lot of smart money loading up here at these zones. Can you play these? Absolutely, you can play those. Just good to know where the smart money is kind of playing, okay? Same thing here. Where's our smart money? As of right now, smart money's way down here in the 13s, but you could see a good amount of support would be right here at these previous highs that we broke through, okay? So doesn't mean like it's going to fall to the smart money, right? You have all these support and resistance zones before then. But if we are in the smart money zone, it'd probably be a good idea to start looking into the company a little bit more while it's there and try to figure out whether or not it's something you want to get into. Okay. So that's the first one, key levels. And there's tons of settings in here. Everything, when you load it onto your chart, should just be how I would use it. If you want to use anything else in these settings, you're more than welcome to. I don't play with them an extreme amount, so um, mainly how it is. I actually don't even use these little letters ones. So if you find the setting to turn those off, you can turn those off. I'm sure they're down here somewhere. Yep, the equal high, equal low one. So you can turn that off. There's a bunch of them though if you wanted to see. Right. There's I forgot which one it was. The swing structures or the break of structure one as well. So there's a couple that you can play with it. It's a huge key level support smart money indicator basically. So it's great, and there's more tools inside of it. If you want to get into depth about it and make yourself even better and play with it, go ahead. But the default settings when you load it is how I use it. Okay, that's all I'm looking for. Just helps me figure out exactly where I should look for support and resistance. Okay, you can hide it when you're not needing it anymore, or you know, do what you need to do. If you don't want the smart money, just hide those colors and leave the blue in support and resistance. However you want to use it. Okay. The other one you guys gained access to now is the Chill Master Elite strategy right here. Okay. And I'm going to go ahead and turn on just our standard Chill Master Elite. Okay. Just like the normal diamonds and everything. What the strategy does is exactly how I like to run the strategy. Okay. As you can see, the win rates are, I will go through them. And just so you guys know, there's no strategy out there that's ever going to be a 100% win rate. Okay. But this is our investing strategy. So it's buying companies you like long term and trading within your long term horizon. Okay. So SoFi for me, I would be fine if I walked away from my investing portfolio for 5 years and came back and still holding SoFi. I would be happy with this company. Okay. But now I want to trade it within those 5 years. So we follow the diamonds. As you can see, okay, 43 trades, 39 of them were wins, 4 of them were losses. Okay. Our average loss was a 5% loss. Our average win was a 97% win. Okay. I don't care about my 4 5% losses, you know. And to be honest, if you're down, if you are about to sell and you are saying I don't really want to take a 5% loss, then don't make the trade, right? Like that's your decision. This is just how I run my strategy. Would I have done these losses? Probably not. If I believed in the company, I wouldn't take the loss specifically. But just to kind of see a back test and everything like that, it's going to show you those losses and everything. Whether or not you take those losses is completely up to you, but this is just to make a generic strategy of trading without having the human factor. Obviously, there's always a human factor to it, which you just can't put into a computer. You can't put into a strategy back test, okay? The way it loads, okay? So you are going to have, this is how it loads, it's 3 years. So I typically don't want to trade a company um, for 3 years, okay, when it IPOs. Now, if I really like a company, right? So when it's an IPO, it tends to, let's just look. Here's IPO. This is a typical IPO situation here, okay? They come to market, they're usually overvalued, some whatever it may be. It's typically, I just wait. I typically wait 3 years. Now, if I like the company, I'll wait 2 years, okay? If I really like them. So, like, for example, SoFi was one of them. So, I'll get into it more early, okay? And some companies do better in the beginning and some companies don't. It just is what it is. Um, so, default will be 3 years. You can change it to 2 years if you just want to see more data, but 2 to 3 years somewhere in there. So, like, if I did the 0 time frame, I'm sure it's not good, right? Because I don't like to trade these IPOs. Wasn't bad. Um, but typically, like I said, I would go ahead and trade just, this is obviously going to be your loss here, but if you waited to here, yeah, that looks pretty good. Anyway, I personally like to wait at least 2 to 3 years, so go ahead and adjust that to however you want. Leave this how it is. This is trading off of the weekly and monthly, so go ahead and leave that. And if you rather just do the manual time frame of a 1 month or 1 week, change that. But I would just, this is again my strategy. So if you wanted to change these to kind of see if you can get some better results, go right ahead for it. And then inside of here, what I would do is I would do on bar close, so that way you can see um, the arrow will be on the diamond, that it's actually following, so you can see it that way. I would do that. And then what I would also do is if you go to style, remove the quantity, okay? So the quantity just means how much I would buy and sell, which isn't, it's not true. I had to create it so that way it follows every diamond. So the quantities aren't right. What I will tell you is my quantities are um, pick a number as far as how much you're going to invest in the company. So, for example, if I was going to buy SoFi, okay, um, I would pick, I'm going to invest, $10,000 into SoFi. Okay, well, guess what? I'm not going to buy $10,000 on the first diamond, right? On the first buy. Okay, that's not how it works. So what I would do is if I'm doing a buy, I'm going to buy 25% of what remaining cash I have. So if I have all 10,000 and I'm going to buy 25% of the company, I'm going to buy $2,500 of SoFi. Okay? So now I have $7,500. Now I get an add. So now add would be 10% of my $7,500 I have remaining. Okay? Now, if there was some trimming involved, obviously now your balance adjusts, but just keep it simple for right now. It buys 25%, so I buy $2,500. Now I have $7,500 cash. Now an add is $750, right? Of 10% of that 7,500 would then be $750 more of SoFi, okay? And then when you get to a trim, let's just say I have 1,000 shares, a trim would be 15%, okay? So a trim will be 15% of my currently holding 1,000 shares. So then I trim the 150 off of there, so now I have 750. Then I get a sell, and my sell is going to be 25% of my 750, okay? And then a purple is going to be sell all, just do it, okay? Sell it all. Okay, and then a weekly buy is actually a multiple times 2. So, sorry. So, for example, we have all of these activities happening, right? Then we get a buy, a weekly buy. You know how I said 25% of your available cash left to complete your position goes into a buy? Well, on a weekly buy, it's double that. So anywhere between 25% to 50% of your cash that is remaining to go into SoFi. So if I needed 10,000, like I had no more shares, right? And SoFi, I was like, okay, well, I'm going to get back into it. A weekly buy, I can choose between 25% to 50%, meaning I can buy $2,500 worth to $5,000 worth. And why is that? Because the more undervalued something becomes, right? This ad right here is not super undervalued, so I only do 10%. Now it becomes more undervalued and I should be doing 25%. Now it becomes a weekly, which is under this moving average, becomes really undervalued. I should lean into the company I really want at this level, right? Which works out. You buy here right before this huge run up. Okay, another 25%, 25% buy, 10%, 10%, 10%, 25, 25, 25, 25, 25, 25, trim, 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 trim. Okay, at 10%, at 25%, right? As we're getting more undervalued or adding more. Okay, that's how this works. So if you do, I believe if you click to go to like the I don't even, it's like to read the script. I'm sure I can pull it up. Give me just 1 second. Let me pull this up here on TradingView. TradingView Elite Strategy. Okay, so if you go to read the script on here, okay, it has it right here. Step one, choose your investing amount to buy a stock. Equals maybe $10,000 into a stock. When you buy, it's 25% of the cash available for your position. When you add, it's 10% of your cash available for that position. Trimming, you trim 15% of your current holdings, right? So however many shares you actively are holding, it's based, the percentage is based off of that percentage, like whatever you currently hold. And then you sell 25% of what you currently hold. And then purple is a sell all. I don't care how much you love it or how much I love it. Just sell it all. Okay. You'll probably get a better, usually you get a better opportunity. Okay. And then your weekly buys will be anywhere between 25% to the 50% cash available for that position. Okay. This is how I follow this, okay? And if we go through and kind of look through these back testing, right? We'll go to SoFi, we can go to HIMS. We want to go to HIMS. We'll update this little just so you guys can see. Okay, 63 and 6 losses. Average on our 63 wins is 88% profit. And we have an 11% average loss on the 6. Okay. And the 6, remember, the 6 trades that we took a loss on, it might be a trim. Again, you don't have to listen to that one if you don't want to take a loss on it at all. Just give it more time if you believe in the company. Now, if you don't believe in the company anymore, right? Well, you should probably sell. All right. So, the reason I wanted to give you this strategy is because you will notice there are more diamonds on the chart than which the strategy is buying. And why is that? Because some people might be a little bit more aggressive and want to know when a good time is to buy the company they like. Okay. These are great buys. Buy, 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 another trim. Buy, 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 trim, trim, trim. Okay. Time will tell whether or not these are good buys. Now, I personally am not interested in these ones. That's why I came out with my strategy. Okay. But some people, again, this is just one chart, Archer's one chart. Okay. Where this kind of happens that I've seen. So what was I doing? I was going through back testing, finding everything that I liked, didn't like. Okay. So when we look at Archer, again, we take 2 losses, we take 28 wins. Okay. We still have a 93% win rate. Okay. I'm going to take that all day. Whether or not you want to implement something else into the strategy where you say maybe you cross this blue line and you fully exit, again, that's completely up to you. I'm in this strategy right here is meant for the long term trading within your long term investment. Okay. So the mindset is always long term. These trades allow us to trade within that long term time frame and take more wins. Okay. So same thing. We can go to ONDS. Now this one again is going to be based on the 2-year, 3-year because it's super young. So if we go here and we go to our strategy, we can change So this is based on 2 year. Okay, were you really looking at ONDS 2 years ago during this little IPO downfall? I wasn't. I've only recently been looking, so let's kind of like narrow this down a little bit, right? And there we go. We should have a 85 win rate. Again, I wasn't paying attention to it there or here or here or here, right? So now we're kind of looking into this company, and this company is super bullish. So I would believe long term, I should go ahead and follow this strategy with this company, right? So it's hard when you're doing all the back testing to find everything because obviously this company then wasn't anything to us. It's now become something. So our strategy should get better. The same way ASTS, right? Okay. Nothing to us here. Now it's a good company and it's something to us. And now we're hitting the win rate to be 100% win rate. Okay. 100% win rate with an average win of 228%. I will take that all day. Okay. So obviously, you got to believe in the company. It's got to be hitting their stride, obviously. But to take your wins along the way, where to add, where not to add, which ones I'm taking, which ones I'm not taking, right? And you say, well, why wouldn't you take this one? Okay. You can always, that's why I leave these diamonds here because if you like the company you want to add, it would have been a good spot to add. Based on the prefixed filters I have set up to determine these add and buys and trims and sells and whether or not I want to follow them, okay? It's to try to make it as best I possibly can for a every possible chart you pull up, okay? This is how I have to do it. I can't do one-off diamonds for each one. If I love ASTS, guess what? I'll follow that diamond. I will buy an extra diamond. I'm not saying you can't buy an extra diamond. I'm just saying if you want the generic of like what I would follow that I find that best fits throughout a whole system, this is the strategy for sure. Okay. One thing I will say is your crypto stocks. Okay, your crypto stocks, the clean sparks, the ASST, the SBET, all that. Okay, what I would do personally, you can keep an eye on the chart itself, but those follow crypto. So you gotta just chart the cryptocurrency. So ASST follows Bitcoin. Guess what? Go chart Bitcoin. Okay. If you are an SBET or BMNR and they are part of Ethereum, go chart Ethereum because that company does not matter what they do. It doesn't matter. Their earnings don't really even matter. Nothing matters except the thing that they hold, the asset they hold on their balance sheets is the cryptocurrency itself. So if that cryptocurrency goes up, their stock goes up. If the cryptocurrency goes down, their stock goes down. So I don't really care what their chart says because it's irrelevant to anything. They put out some bullish posts. Guess what? The stock will go up for that one little post, that one little moment. But if cryptocurrency goes down the next day, the stock goes down. It doesn't matter. Cryptocurrency has to do what it needs to do. I don't use this specifically because our strategy is based off of a business that has earnings, right? That actually can prove a product, can prove constant growth, not something that's based on an asset or currency that they're just holding, right? Because there is no true value to that company. The value is the asset itself. So you need to go do the asset, not the company, because the company, again, doesn't do anything. So I personally just don't trade a whole lot of crypto. I prefer companies that truly have something that is backed that can be like valuable of some sort because anyone can technically go out and just go buy some currency. So but this is our strategy, our key levels, and then obviously you guys have the momentum oscillator, which is a huge one. So this is our investing one. Again, we'll be working in the future towards a more active trading one, but I want to make sure we got this one narrowed down and everything. So I appreciate your guys' support. I'll see you guys later. Thanks.